Hey everybody, Jeff Garber, mortgage expert. I want to give you a quick update on what has been going on with interest rates. I haven't brought one to you for a while. Let me break it down for you. Today is Friday, February 17th of 2023, and here is what's going on. So, mortgage rates come from the bond market, as I've said before. And inside the bond market lives mortgage-backed securities or mortgage bonds. And as they go up in price, as you can see here, rate comes down. And if you look to where we're at now over the last week or two, we've been on this downward trend in the mortgage bonds, which means rates have been going up. Why? Well, let's go back to November 10th. We got a good reading on inflation, and mortgage rates tend to trade. Well, they do. Mortgage rates will go in the same direction as inflation. We've seen that at all points in time in history. As inflation comes down, mortgage rates come down. If inflation's going up or perceived to be going up, mortgage rates go up. So November 10th, great inflation reading. Huge day. Mortgage bonds were all the way down here. We peaked out up here around February 1st with rates, I don't know, maybe upper fives, 6%-ish, right? Which is great coming off of rates in the sevens that we saw. But on February 3rd, the first Friday of every month, the jobs report comes out. All right. And the jobs report measures the unemployment rate and job creations in the United States. And this report comes from the BLS, the Bureau of Labor Statistics. And as odd as this sounds, the BLS ironically changed the way they measure the jobs report. Kind of funny timing for this report. In other words, they rigged it. They made it look better. The real report should have shown about 85,000 job creations, which would have been way below expectations. Instead, it showed 510 or 515,000 jobs created for the month of January, which we know is not the case. Now, why does that matter for mortgage rates? Well, if the Fed sees a good, strong jobs creation report and a lower unemployment rate, they feel that we aren't going to be heading into a recession, and that gives the Fed the green light to continue to hike rates to get ahead of inflation. Now, the Fed hikes short-term rates, which typically helps mortgage rates because the Fed hikes rates to slow the economy down to make things more expensive, in which that will reduce inflation and mortgage rates will come down. Now, that didn't help us because the markets are waiting for the Fed to be able to stop the rate hikes, all right? We feel they've done enough. We've had 4 inflation reports, even including the one this week, still saying inflation is coming down, all right? But because inflation didn't come down as much as the market expected, in conjunction with a strong jobs report, the bond market doesn't like it. All right. Even though we know inflation is coming down right now, we have this temporary situation that we're in, that a higher jobs report and inflation coming down, but not as quickly as we want it to, is spooking the markets a little bit. And inflation has that much power. So we've lost some ground in rate this week. All right. We're still in the sixes, but we got to get out of this downward trend. Now, what do we have in our favor? We have more inflation readings coming out the end of this month. We have the PCE. There's 2 measures of inflation that comes out each month, the CPI and the PCE. This PCE will come out at the end of the month, but we feel that in the middle of March, I forget the exact date, March 10th, March 14th, the next CPI comes out, and we feel that that is going to have a lower number and get the markets back on track. Bottom line, we're going to have some volatility in rates. We're going to have some big swings here. Big picture, we're going to see inflation come down at some point, possibly June, July, second half of this year. We could see rates coming down, but we're going to have some volatility in between. So we're going to have to deal with it. But I just wanted to let you know exactly why this was happening, and I hope it helped. Have a great weekend.